Hey guys, welcome back to another week of Mortgage Matters in Minutes. I know it's Friday. I'm a little delayed here as Tuesdays are our normal days of going live, but we had some busy activity this week, which is wonderful, especially in what's all been going on here lately in the real estate market. So we decided to come to you live on Friday just to switch things up a little bit and get a conversation going here. Today is usually closing day, and while we did have a few closings this morning because many people like to move into their new house this weekend, we thought we'd just talk generally today about three things to consider when getting a mortgage. And we had the same conversation with clients often is we try to keep it as simple as we can for clients and educating them on what it takes to get a mortgage. And I know a lot of times there's rumors out there and people talk with their friends or family, their parents, and try to get as much info as they can before they contact a mortgage lender to make sure they have themselves educated in line for what needs to be happen to get qualified. So we really like to tell our clients we break it down to three simple items: your credit, your income and debts, and the third is how much money do you have for your what we call cash to close. And if we can break it down to those three things, I would say that's 80% of the loans. And while there's lots of rules inside of those things, if we basically have those three items set up, or those three items you qualify with, you probably will be able to get pre-approved and close on your financing. The rest of it's then just providing the paperwork to show you have those items. So let's first talk about your credit. So your credit obviously is number one thing that mortgage lenders look for to make sure the credit score is adequate in order to get financing. Generally, we talk about needing at least a 620 credit score. FHA will go down below that to a 580 and possibly even lower depending on the lenders. But generally speaking, we like to educate people to get at least a 620. I can tell you right now, even getting that 620 is just not nearly enough with a conventional loan to get you qualified. So while we say that is the bare minimum, we don't always want to shoot for the bare minimum. We want to go and actually obtain something higher, closer to 700 is a much easier predicament. We also want to share with you that looking at those free credit scores is not the same credit score that we are able to use in order to get financing. And so the credit score makes a big difference on whether we obtain it as a paid or a different scoring model, or if you get a free scoring model. And we've chatted about this many times before in the past. The second item is what we call income or debt to income ratio. A lot of people say, how much income do I need to afford this $200,000 house or $300,000 house? Well, it depends how much debt payments you have. And what we look at in the credit report is your monthly bill obligations, and what you pay minimum per month. We might not care that you owe $30,000 or $50,000 in your vehicle loan. We care what your minimum monthly payment is. Is it $300, $500, $1,000 a month? So what we're doing on a mortgage loan is looking at your debt to income. So it's a simple formula. We get your income calculated to a monthly basis. We get all your debts on your credit report and possibly the future mortgage loan that you're going to take. Add up all those debts, divide it by your income, and generally we need to be at about 40%. So as long as you don't have a lot of debts and you have good income, you then again are going to look at qualifying. The last piece is what most first-time homebuyers struggle with, is what we call the money needed for closing, or the cash to close. The money that's needed for the down payment, the closing costs, and the prepaids. Basically, all the monies that are going to be needed to purchase that house. And some people state, well, don't the sellers help with some of those costs? And in a normal market where buyers and sellers equal each other out, they do. But the last few years, we've seen it being more of a seller's market, which will obviously change to a buyer's market. These markets change all the time, and they'll give consumers some incentives to saying, hey, buy my house for this, we'll help you with closing costs. Generally in the Omaha area, you might need somewhere between $10,000 to $20,000 to cover your down payment, closing costs, and prepaids. You can always put down more, and there are some loans that you can put down less. But as long as we get through those three simple basics of lending, which is your credit, your income, your debts, and then the cash, we're generally free and clear. We're generally there. It's a matter of just getting that information in so we can do the math to make sure you qualify. I know a lot of people call and say, well, what if I don't meet one of these criterias? Well, generally speaking, you're not able to get a loan. And there used to be a lot of loans that were obtainable that allowed us to get around those things. But these day and age, with the rules that have been established since 2008, we either meet these standards or we don't. And it's good if we don't meet those standards, let's work to get to those standards. Or if you do meet these standards, hey, let's look at getting pre-approved. Let's look at purchasing a new home, your first home, your second home, whatever the case may be. So hopefully you learned a little bit here today of what it takes to get approved or pre-approved for a mortgage. We're always going to be here to answer your phone calls, questions at 402-991-5153. Or you can check us out on our website at mtg-specialist.com, or you can read many blogs and questions and answers, and hopefully videos you're watching like these to get an understanding of what it takes in the mortgage industry. I'm Brent Rasmussen, owner of Mortgage Specialist, and here to help you at any time. We will talk to you all very soon. Have a great rest of your week. Mortgage Specialists. Driven, trusted, reliable.